Hey guys, Boris Thomas from BK Forex. Welcome to our Forex Daily Technicals for 524. CommDollar Bottom, the big question out there as we wind up the week. Trading foreign exchange on margin carries a high level of risk, may not be suitable for all investors. So I ask you to take a look at this disclaimer, read it very carefully, and understand and be aware of all the risks associated with trading on margin, and seek advice from an independent financial advisor if you have any doubts. Well, I want to start right away with the Aussie dollar, which I think is probably the most interesting chart of the day today as we look at the trade going into the final day of the week. Generally, and this could be one of those days where it's really an exception, this kind of a doji on the dailies really signifies a spike bottom. I mean, we basically tested 96s, ended up above 97s. However, as we start the Asian session here, dollar is starting to get bid right back again. Aussie starting to slide right back down again. We have a little bit of Chinese data overnight, not much, but this could be one of those kind of yet incredibly frustrating patterns where what looks to be a bottom and a move up can be frustrated for a second test to the 96 level. Either way, I do think that we're coming closer to the rate of exhaustion, and the rate of descent has clearly slowed here over the last couple of days. But there will be some sort of, if not a big, but it's sort of a mild bottoming turn in the Aussie in the near term. Today looked like it was going to be the kind of a day. I guess at this point, when you're looking at the Aussie, you really have to just look at the day's highs, which is 97.78, and assume that's going to be the reference point for any bull move forward. So if you can break that higher, then 98, 98.50 comes into view. If we can't even come within a pip of the day's highs, obviously we're due for more consolidation. Having said this, though, I do think this below 96 stays a pretty decent support on the Aussie, and we may test it. We may push ourselves a little bit lower, but 95.50 is going to be an area where I think probably bargain hunters are definitely going to come in. That's almost 5 pennies below parity. And it's going to be a pretty good value proposition for a lot of reserve managers, given the fact that the Aussie is not going anywhere with its yield. So we may not be at the end, but we're definitely getting to the beginning of the stage of the end of this downward trend for the time being. And it's going to be a very interesting chart as the day develops to see if actually we bring in fresh buyers, or whether yesterday's move is just going to break the hearts of anybody who tried to bottom a bargain hunt. As we did yesterday. Euro, sort of a similar kind of a thing, but not nearly as dramatic. And Euro, in many ways, if you look at the daily charts, certainly doesn't look bullish, but no longer looks really bearish. You're in a situation now where you're starting to get higher lows. You stopped the descent before the spike low of 27.50, basically around 28. And as long as we respect these areas here, as long as these areas are respected, not violated, you kind of have to give the benefit of doubt to the longs. If you're a long-term positional trader, this is probably as good a value proposition as you're going to get in the near term in terms of being able to play the bounce for the next 100, 150 points towards the 130, 131 level. I do think that the 29.50 obviously is the near-term resistance, but the real big resistance is going to be the 130. That was former support. Look at this thing. This is going to be the challenge for the longs. Former support now becomes pretty stiff resistance to the upside. But in between that, there's going to be a lot of channeling between the bulls and the bears as they try to squeeze the last bit of pips on both sides of the trade here. Still, watching the lows, it really does make me believe that the lows may have been set for the near term in the euro. Yen is rebuilding. We have Amari comments on the tape right now that's kind of helping push it through the 1050s, but it's kind of come back off of it. So the question with the yen, of course, is it always is a staircase up and an elevator down, but then after the elevator down, you kind of have these consolidated phases. If you look at this big move, you had a 3, 4, 5 day of consolidated phases, still respecting the highs of this break candle. And I don't think, my point is, I guess, we're not going to break the highs of 103.75, or at least it doesn't look like we're going to do it for the next couple of days. But neither we're going to violate the lows very much more. So this 180 is probably going to be respected for the time being. If you take this as the analog of how the yen has been trading in this particular session. If, however, and this is, I think, a really big if we violate the lows here, if this particular price development now starts to test 150, that could signal a much steeper correction and a much more meaningful top than the kind of top that we saw here, which was just sort of a profit-taking top. Right now, it's still the benefit of doubt is to the profit-taking top that we're seeing here, which is basically consolidated and then perhaps a push higher. But if we start breaking the lows here, that could mean a much more secular top with a much longer corrective period all the way down into the 90s before we start to rebuild again on the yen. So I think yen is kind of in the midst of a very, very interesting proposition right now. Certainly worth bears watching. And cable is just quiet, not doing much. You know, we held the 150. We're kind of putzing around. The 150 is held several times here. It's a relatively decent support zone, by the way. It comes out from from all the way over here and definitely holds. But we're capped at 151, 5150, and then 5200. So the progress in cable probably to the upside, but it'll be slow and grinding at best. And then the last, I think, worth watching. I haven't even looked at the caddy this whole week, so it's worth just taking a look at the, since we're talking about CommDollars. The interesting thing I think about the caddy is the flame out at 103.50 several times. Yesterday's with the big reversal candle, but now, if you notice, the thing about CAD is that before we were trading 102, 102.50. Now we're trading 103, 103.50. That suggests that we're still inching up. A break of the 103s, basically 104s. Break to the 104s very much opens up the move to 105s and beyond. It just suggests further dollar strength as we go forward. And obviously more commodity dollar weakness, which would derail my thesis that the Aussie may have bottomed. As I said, this could be a very heartbreaking chart for anybody who tries to bottom pick. But for the time being, as long as the lows hold and are not violated, it still may be more of a long than it is a short as we close out the week. Wishing you guys the best of luck and the best of trading. This is Boris Schlossberg for BK Forex. Come visit us on the website and at FX Flow. And as always, read the disclaimer to understand all the risks associated with trading foreign exchange and margins. Have a great weekend. Over and out.